Well, hello traders. Just a very quick update. It's going to be a couple of minutes. There's not a lot of news coming out today. We had some European news, unemployment and PPI, etc. But nothing really, no great shakes there. PPI's come down a little bit in Europe, which PPI's come down a little bit in some European countries, including Germany and Estonia and perhaps France and that sort of thing, but nothing of great interest there. Could be a little bit encouraging for Euro shorts, the fact that producer price index has come down in Germany, the biggest economy in Europe. A little bit later on, we've got jobless claims coming up in the US, always of great interest to the Fed and to the markets, so we'll keep an eye on that. But it looks like there's no great change expected in average claims, ongoing claims, etc., etc. And we've got existing home sales coming up a little later after that. And that's going to be an interesting one, expected to be down 4.2%. from a previous level of up 14.5%. But this number fluctuates quite dramatically from month to month. So those numbers are going to be taken with a pinch of salt. And that's about it, really. So let's go across and have a look at the charts. My view has not changed in general on the dollar and stock markets and natural gas and gold, etc. since the last update. However, it's open to change, of course, as it always should be when you're trading. So I don't really know where these markets are headed. I have an idea that we're going to see some continued strength in the dollar, so that it influences my view on the euro and the pound, and we're short on the euro and on the pound. Just moving up a little bit today, but if you have a look at the euro, you could consider the last 3 days on the euro to be a consolidation period with a potential move lower. We'd really like to stay below this level where we are at the moment at 109.70, which is this previous high over here, just going back a week or two ago, and the previous tops from the last 2 days. You can see the last 2 days actually formed a tweezer top, which is quite encouraging for shorts, and a sort of a hanging man candle. So those last 2 days right there form a potential reversal pattern. We'd really like to see the market stay below 1.0970 or 75, maybe 85 at the most. So we'll see how that works out, and we're short the euro and the pound. Pound, the same sort of thing. I'm not going to go into each one of the majors because they'll all probably follow suit, but you can see this green line on the pound is a really key level. We've poked up it twice and failed above there, and we're now just underneath. So ideally, the pound would actually reverse here as well. It's the perfect level. We're stuck between the 20-period moving average and this very important green horizontal resistance line, which has been penetrated twice and failed twice with this big bearish engulfing candle a few days ago. So we'd like to see the pound holding beneath 1.2450, somewhere in that region. And with a bit of luck, we can hold beneath there. So I think that's pretty simple. We've got the pound and the euro at key resistance levels right now. If you want to compare that to the dollar index, you can see a similar sort of pattern on the dollar index. We'd really like to hold above this level that was formed by the 2 previous days' lows, and also tweezer bottom on the dollar index. Not quite, not perfect, but you could consider that to be a tweezer bottom, and yesterday's candle potentially, not quite, but almost a sort of a piercing pattern. The body of yesterday's candle closed just above halfway up the previous day's candle. So we'd like to see the dollar index hold above here. And like the euro and the pound, you can see the 20-period moving average is actually the obstacle at the moment. So we need to get through that 20-period on the dollar index. We need to get through the 20-period on the pound. And we need to get through the 20-period on the euro. So really simple on the majors. Let's go across and have a look at the yen pairs. We're seeing a little bit of weakness in the CAD yen, but we're not seeing the same in euro yen. There's potential for the euro yen, which is probably the most interesting because we're at this very key recent high at around 148, and we're just hovering beneath that. So as long as we're beneath sort of 148, 148.40, there is hope for the euro yen to move down into some of these lower levels, down into the high 130s and then down into the 120s eventually as time progresses. We'll have to see how that works out. And a lot will depend on how people view the euro basically as a standalone currency and also against the US dollar. CAD yen just beginning to form a top there. We're short on both of these. This one I'm not too sure about. Hopefully we'll hold beneath that 148.40, 50 level. And on the CAD yen, we'd like to hold above this recent high. We are beginning to move down on CAD yen. So looking at stocks again, once again, really interesting. These topping patterns on NASDAQ and S&P are of great interest because we're not sure if this is a top preparing for move down or if this is just a consolidation preparing for a sudden surge higher. What we do know is that there is potential for NASDAQ, for example, to move up to 13,700 and potentially even higher than that. But at the same time, there is all sorts of short interest in the stock markets. So it's really in a tussle between the bears and the bulls right now. The VIX is at its lowest level seen since the market top in 2021. So the last time we had a VIX this low was going all the way back to this previous S&P high. And right now, we're nowhere near as high as that, of course. But we are at crucial resistance. And we're also potentially heading back down towards this channel bottom. A break through this channel bottom for a second time would be pretty bearish for the S&P. However, for the bulls, it's really important that we hold above this current level, potentially this channel bottom, and move up, first of all, to 4,200, and then up towards this channel top, and then eventually up to 4,320, where the 61.8% fib is, and then potentially the channel top. So we're at a crucial zone. Remember, right now, the VIX is at the same level that it was when we formed the all-time high and then collapsed back down. So really interesting on stock markets. So we're short NASDAQ and we're short S&P, but ready to change opinion on that at a moment's notice. We're also short Nvidia and Apple. And right now, like yesterday, you can see that the pre-market levels are a couple of dollars below the close of yesterday. But yesterday we saw the same thing and the markets just rallied up from those pre-market levels. So we might see the same thing again today. We did form a new high on Apple, but not on Nvidia. We're short both of these for the moment. Going across to commodities and Bitcoin. Bitcoin just coming back into that pink zone. I don't know if we'll see a move lower today. We've taken a little bit of profit on this short so far, and we're willing to let this fall back down to test the channel top. And if we don't manage to break down through that channel top and start to bounce off there, we might have to cover those short positions. However, as long as we're beneath 31,000, maybe 31,500, somewhere around there, the idea is for Bitcoin to reach down to this channel top and then back inside this channel to test some of these lower levels, and then eventually potentially reaching 22,500, 23,000, somewhere around there. On gold, there's no change so far. Not much of a move yesterday, a little bit of faffing around up and down, and we're still looking to buy gold at around about 1950, maybe 1920, and we're even allowing for a dip back down all the way down to about 1820, 1810, back to this major support level going back some time. But I think, however, if you look at yesterday's video, you can see a bit more detail on this one. I think we'll probably hold above this channel top or this red line down here at 1920. And that's where the 50-day moving average is. And in a few days' time, the 100-day moving average will catch up with that as well. So 1920 to 1950 to buy gold. I'm not shorting gold at the moment. We're looking for longs if and when we get down there. No change on sugar. We're short on sugar. Yesterday's candle was encouraging. There's a tweet on sugar, and one of the previous videos in the last couple of days, I covered this candle formation on sugar. And as long as we're below about 25 on sugar, we're looking for a move back down into these moving averages. Yesterday's candle was pretty encouraging. This dark cloud cover candle just reaching up to a new high and then falling down, completely engulfing the previous candle with a little spike high wick top on there. And now today we haven't rallied up further, just a little bit, and it looks like sugar may continue to move lower today. First target 23.70, and then somewhere around about 23, and then perhaps all the way back down to about 20.50, 20.80, where this 100-day moving average is. So we'll keep an eye on that. Remember, we've got a horizontal support line at around about 21.80, so that would definitely be the first target. And that's also where their 50-day moving average is moving up. I'm not going to cover crude oil or WTI because we've taken profit on that short trade already, but I am going to quickly look at natural gas, and I'm not going to go into detail about this, but you can go and have a look at my previous couple of videos and have a look at my tweets on natural gas. And there you can also find my updated position. I added another long position on a dip down to 2.2, roughly half the size of the position that I've got from $2. And taking me to about 75% of the position size that I'd like on natural gas. So far so good. We're holding above the 20-period moving average. It dipped a little bit lower than I thought it might, but that's okay. We're right back at my entry level, and we're actually in a little bit of profit on this new trade, on this new position, and hoping for a move back up into this green zone above us. But I'm not going to go into detail on natural gas in today's video. This is just a brief update on my positions. If you want to see precisely how I structured this new position, please go across to my Twitter channel, and you can see my post on there, which I posted sometime late yesterday. I said I wasn't going to update on crude oil, but here it is anyway. We've started to fill this gap fueled by the OPEC supply and production cut, and we're just filling that gap now, coming down into this confluence of moving averages. I think that the lowest we'll probably get today or tomorrow perhaps is around about $75, and then I expect we'll see a bounce up from there. I think we're right in the middle of the trading range right now. It's possible that we'll trade somewhere between $65 and $75, maybe $80 for some time to come, and we're approaching the middle of that sort of range right now, so I don't want to be taking any positions on crude oil. So just to finish off this video, you can see that sugar is still coming down a little bit since I started the video. And the other one that we're interested in is soybeans, and I also mentioned this in yesterday's video, where I mentioned that we had a good opportunity to short soya at around about 15.20, and we're now down into about 15. I expect that this will continue to move down. It might be a stuttery, jagged sort of move. There doesn't seem to be any great incentive for this price to move down, and a lot will depend, as with all commodities, on the way the dollar trades in the forthcoming days and weeks. And if we see the dollar begin to strengthen, we should see commodity prices in general come down. Hopefully not natural gas. So just switching quickly back to the euro and the pound, you can see these are now starting to drop as well. And the dollar index just getting a little bit of a wiggle on and moving a little higher. So all going pretty well so far. And that's today's trading update. If you enjoyed the video, please press the like button. And if you're new here and you want to receive further video updates, why not subscribe to the channel? Take care.